A very good afternoon. Welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a day where we are definitely under pressure at this point in time. So we have the bank nifty, which is the key culprit, down around 1.5%. But we have other frontline indices which are under pressure as well, frontline stocks rather. So, for example, we have Hero Moto, which is down around 4%. We have Axis, which is down around 2.7%. Bajaj Auto, along with Reliance, both those stocks are showing cuts of over 2%. So, overall, it's a weak market. Some profits being taken off the table. It was a mixed close for Asia. While China rallied, we had Japan, which was under pressure. So, maybe there is a little bit of fear and trepidation coming in on account of the volatility there. Hi, Vinny.
Hi Ekta, good afternoon. Not much of an exciting day across the board, mid, small cap, nothing exciting today that we're seeing, and a bit of a nifty at the day's lowest point. Individual stocks also not much of an excitement, especially look at the heavyweight Reliance, that's down and out in trade. Two-wheeler names like Hero Moto, TVS Motors, all of them under pressure as well today that we're seeing specifically in terms of a sector we're watching out for is going to be auto as well. Tomorrow we do have the auto sales numbers that will be in focus. PB Fintech is a separate stock that we should be keeping an eye out on today as well. We did have the management talk to us about the healthcare foray, the investment plan that they have over there in terms of $100 million investment will be what they will be looking to make. It's a one-time investment, so not much of a worry on that. PB Fintech today, after 4 or 5 days of consecutive fall, we're seeing PB Fintech managing to see some bit of a green there. But on that note, let's get started with all your stock-related queries. You can always email us your queries, and to solve those queries, we have two experts joining in with us today. We have Astha Jain from HEM Securities as well as Ruchit Jain from 5paisa.com joining in with us. Astha as well as Ruchit, good afternoon, and thank you so much as always for joining in with us. Let's start with the first query. We have Nikat, who's writing to us from Mumbai. She's holding 50 shares of BHEL at a price of 323 rupees per share, as well as 48 shares of HEM Zinc at a price of 518 rupees per share. So yes, in terms of was HEM Zinc, she's making a profit, but BHEL, there's a bit of a loss that she's making over there. She wants to know what is the future prospect of this investment in the long term. So, Astha, I'm going to come to you. What's your word for both these stocks?
Hi, good afternoon to all of you. Now, talking about, first of all, BHEL, I think the order book is quite strong. They have the order book of more than 350 billion, and they are L1 and various orders. So, we are expecting this to continue, the surge in the order book to continue. So the order book is the main focus in this companies, and on that basis we are positive on the counter. My idea here is to stay invested in the counter. Initial price target which can be set for the BHEL at present moment of time is around 320 to 330 odd levels. Now talking about Hindustan Zinc, here also we are positive on the counter, and if I talk about their targets of Hindustan Zinc, it is somewhere we are giving it to around 585 odd levels to be very precise. Now talking about the Hindustan Zinc as well as, first of all, the idea is to hold and looking after the surge in the metal across the world. We are seeing that definitely will help this company in showing strong performance along with the strong industry tailwind which this company is enjoying. We are expecting Hindustan Zinc to post strong side of numbers in the quarter coming also. So I think keeping all these points together, it creates definitely a recommendation should be hold for this counter, and it creates that case. So a hold is recommended for this counter with a price target of 585.
Okay, all right. But Ruchit, what about you? What's your recommendation on both these counters? Hindustan Zinc has done better than BHEL, but for both of them, what's your call?
Yeah, hi, very good afternoon to all of you. Well, BHEL I would recommend to hold, although it's a short-term correction because the momentum readings were quite overbought when the stock rallied towards that 330, 320 kind of range. But the long-term trend is still not negative. So I think there could be some time-wise correction in the stock before resuming its uptrend. But yes, if the view is for more than 6 months, I think the stock has potential to rally again towards 327, which would be the next technical resistance. So hold on at current levels. When the stock comes around at 327, 330, one can take a review again at those levels. HEM Zinc also has corrected since last few weeks. So primarily now if you see last 3 or 4 trading sessions when the metal stocks have seen a good rally, this is one stock which has not yet participated. Now the stock should give a breakout above 550 kind of levels for any trended phase. Otherwise 550 to 470. I think this is the range where some consolidation could be expected. So because the sectoral move is positive, I would advise currently to hold on. but also to keep a strict stop loss below 470, because if 470 gets breached, then I think that underperformance is likely to continue.
Okay, all right. So that's on Hindustan Zinc and BHEL. We now have Munira Julu, who writes from Chittoor. He wants to invest in Piramal Pharma and EPAC Durables and wants to know the entry levels for the longer term. So two stocks looking at investing. It's more of an investment question. So Astha, I'm going to toss it over to you. For both these counters, what would you recommend? Because EPAC has seen a strong run-up, but Piramal Pharma as well has seen a good run-up, and it's quite bullish on the future prospects as well.
Yes, so talking about first of all Piramal Pharma, since we know that this company operates in the three segment with CDMO being the major one, and in fact complex hospital generics and consumer healthcare are the other two segments in which the company is operating. Now we are positive on this counter. The main core behind this, strength in the company is that what we believe that company's management has given a very strong guidance, especially for FY30. They have guided for a very strong growth, and in fact they are guiding for doubling the revenue. So it makes a strong case to remain invested or to make a new investment in the counter. Along with that, the strong EBITDA margin of around 25%, which the management has guided for the future. I think that is also keeping us very much positive on this counter. So we are positive on this counter, and we are recommending buy also, as well as a hold strategy can also be implied if anyone has this counter in their portfolio. Price target which we would like to give to this counter at the initial level is 255 to 260. Now talking about EPAC Durable, here also we are positive and we are recommending buy, but we are mentioning here that buy on dips is a better strategy for EPAC Durable. Talking about this counter, it is like 80% of their revenue is coming from RAC, residential air conditioner segment. Now the company is looking to diversify their product portfolio, and I think in the coming 2 to 3 years down the line, this RAC segment will constitute 65% of the total revenue, which is presently standing at around 75% to 80%. Since the other part is a high margin generative part, so we believe that this counter will also giving strong numbers going ahead, and that's why we are positive on this space as well. Recommending a hold and buy on dip strategy can be applied. Price target can be set at around 450 odd levels to this counter.
Okay, so Astha, you are positive on both of them. But Ruchit, what are the technicals looking like for both these stocks, right? Like Ekta was also highlighting before, because both of them have seen a run-up. Whether you look at 6 months or 1 year, we're seeing a good uptick in these stocks. So technically also, would you have a positive view on this?
Yeah, so there's no doubt about the trend for the stock. For both the stock, the trend is positive because the price move that we have seen recently have also been supported by very good volumes. So usually such outperformance can last for a longer period of time. So I would suggest buy and dips for both the stocks. Piramal Pharma has good support base around 200 to 210 range. So in case if we see any dip towards that 200, 210, one can use that as a buying opportunity. And even EPAC have seen a good price up move recently. So good thing is about the volumes which I spoke. When the volumes are high, generally that outperformance continues. So 340 is the support, 340 to 350 range. And if I look at the charts considering the previous breakout levels, so any dips towards that support range of 350, 340 should be used as a buying opportunity.
Okay, all right. Well, we have another query now. We have Suresh, who writes to us from New Delhi. He holds 30 shares of Maharashtra Seamless, which he's bought at 630. He's a long-term investor and wants to know the target for this particular counter. So he's sitting on a just about broken even on this particular counter. Do you think that there's upside in terms of the technicals, Ruchit?
So I think there could be some short-term consolidation in the stock, but the stock has also seen a correction since the start of this year. In the month of January, it was trading around 1100, from where the stock has corrected towards this 640, 650 kind of levels. Now, I think the price-wise corrective phase may be behind, because this entire correction has seen 61% retracement of the previous uptrend. So there could be some time-wise correction in the short term, where the stock would consolidate within the range of 730 to 560, 550. So I think it seems that could be some consolidation. Need a breakout above 730, then you can expect levels around 800 where an exit strategy should be placed. So for now, I would recommend to currently hold on, but not from a very short-term perspective. In the near term, I think the stock should see some sideways movement only.
Okay, so hold on to it. But Astha, what's your view on the fundamentals as well? Q1 was not much of an excitement that came in for Maharashtra Seamless. But now on the fundamentals, are you also going to be just waiting out and watching out for the earnings and everything to pan out?
Positive in the fundamental is the valuation, because now the stock is trading at a price to earning multiple of around 9.7 or 10. So I think looking after that, it might be looking a strong candidate for the investment. But I would really like to see the results, because in the quarter gone by, as you have rightly mentioned, there was a degrowth of around 60% in the bottom line year-on-year basis as compared to last quarter one of FY24. So I think that is the major concern for the company. Otherwise, valuations are fine. The company's balance sheet is in the healthy position. They have not so much of high debt. In fact, I should say the debt is almost at the zero level. So balance sheet is at the good condition. But looking after the growth in their financial, we really want to give any view. Right now, it's a hold, but no new entry is recommended by our side for this counter.
Okay, sure. No new entry is what we're watching out for right now at this level for Maharashtra Seamless, both Ruchit as well as Astha saying that. Let's move on to the next query. We have Sagar, who's writing to us from Bangalore, and he wants to know, he's holding 2,500 shares of NLC India at a price of 266 rupees per share. So yes, making some bit of a profit there. Needs advice in terms of overall investments for the long term. So Astha, I'm going to come back to you. How is it looking like for NLC?
So Niveli Lignite is looking okay to us. We are positive in this counter, but from the long-term perspective, in the short term, we are expecting some sort of a dips, because we really need to see the margin profile of this company and the coming quarter results. So on that basis, I'm just recommending a hold, not recommending a new entry or a new buying in this stock. So we are recommending a hold on this counter. Initial price target can be set at around 310 rupees.
Okay, all right. It's given 18% returns, say, in the past quarter odd. Ruchit, what's your recommendation on NLC? Any target price, stop loss?
So the stock has formed a good support base around 255. Whenever we see corrections in the stock, the 89 days EMA technically acts as a good support. And in fact, if you look at last 1 month, it has tested that level twice or thrice and but has not broken. So I think 250 should be a reasonable stop loss for this counter. So I would recommend to hold on, since the broader trend is not negative and consolidating in the range, but above its support. So hold on to the stock with stop loss below 250.
Okay, sure. On that note, let's just take a quick break, but we will be answering more of your stock-related queries on the other side, so stay tuned in. Welcome back. You're watching Your Stocks on CNBC-TV18. We're still continuing with all your stock-related queries, and we do have our experts with us, Astha Jain as well as Ruchit Jain. Let's move on and talk about the next query. This one is on Tata Tech. Now, Srinivas is writing to us from Karnataka. He holds 38 shares of Tata Tech at a price of 1,038 rupees per share, so making some bit of a profit there. Wants to know whether he should continue to hold or maybe look to sell this. Ruchit, what's your word on Tata Tech?
So I have limited data post listing, no recent price action indicates that the stock has a good support around 1,050, 1,040 range near the buy price. So I think at current levels should take a chance, because the stock has already corrected post listing and it's trading above its short to medium term support. So hold on, but keep a stop loss below your cost price. I think 1,030 should be a good stop loss to hold on to this name.
Okay, well, Tata Tech not given that much return on the technicals, but what about the fundamentals, Astha?
So as we all know, the company has a strong strength in ICE to EV conversion. In fact, they have a strong strength in the plant engineering, robotics, AI implementation, etc. In fact, they have seen a strong addition of the clients in the last few months also. So I think looking after all these, it's a hold from our side. 1175 is what we are recommending as a short-term target for this counter, because we really need to see the results pan out to be for the quarter 2 of FY25. So before that, I think one can remain invested in the counter and again can review their query. But as of now, a hold with a price target of 1175.
Okay, all right. Now we do have Ajit, who writes to us from Pune, holds 50 shares of Bandhan Bank, which is allotted during the IPO in March of 2018 and the price band of around 375 odd. Wants to know what to do, whether to hold or sell. So currently sitting on a loss in terms of this particular investment. What would your recommendation be, Astha? Would you recommend staying on and waiting for any kind of recovery, or maybe booking losses?
So we recommend staying on this counter because the quarter gone by was a good quarter. The company has shown a decent performance, maybe due to the lower provisions the company has made. But one important point is that, in fact, the product mix has changed and it is more tilted towards the secured loan. In fact, the asset quality has shown the improvement. So I think quarter 2 of FY25 will going to be a decent quarter for this bank, which we believe it is to be. And hence, we are recommending a hold. 230 can be set as a price target for this counter.
Okay, 230 is the target price that you're keeping an eye on with a hold. But Ruchit, what's your word coming in for Bandhan Bank? How are you looking at it on the technicals? Should one continue to hold? Maybe I look to add some more.
So I think the stock has seen a long underperformance compared to other private sector banks, but off late, post that last quarterly results which are announced, we have seen a good price volume action where the price up moves have been supported by good volumes, whereas on corrections now we are not seeing any volume-based sell-off. So I think these are usually signs that the stock should bottom out somewhere in this range of 180 to 190 from a bit 180 to 190 from a bit midterm perspective. So price-wise correction seems limited from here on now. So you can keep a view of maybe two or three quarters more, then can expect an up move from current price levels. So my recommendation would also be to hold on to this name.
Okay, hold on to Bandhan Bank. That's a word coming in from both our experts. Let's move on. And Dheeraj is writing it to us from Delhi. He's holding 100 shares of Bharat Dynamics at a price of 1,120 rupees per share, making a bit of a profit. I don't think anyone is making a loss in Bharat Dynamics or any of those defense names in the recent time, but wants to know whether you should continue to hold this or look to sell. Ruchit, coming to you first on the technicals, Bharat Dynamics after the run-up, should one continue to hold this?
Yes, I would recommend to hold because in last few days the correction has been there, but the stock is now in oversold territory. So one can expect at least a pullback move from a short-term perspective towards 1170, 1190 kind of range. So hold on for now towards for a target potential around 1190 in the near term. And once that level comes, then can take a review again there.
Okay, and Astha, what about you? Bharat Dynamics?
Yes, we are also recommending hold because we know that it is one of the leading PSUs in the defense space, and the results were not that encouraging in the quarter gone by. But believe that going ahead, because we have seen some certain sort of negative bottom line in the Q1 of FY25 if I extract all the other income and exceptional items. So that is a concern for us at this present moment of a time. But looking after the strong industry tailwinds, we are recommending hold as of now, although our price target is 1180 at the current levels.
Okay, all right. We now have Indira, who writes to us from Mumbai, holds 450 shares of RVNL, which is bought at 259. She wants to know whether she can hold or exit this particular counter. Again, it's one of those, sitting on a very strong profit when it comes to RVNL. What would you recommend in this case, Ruchit? Do you think that one should probably take some profits off the table, or maybe even add on to these levels?
Well, I would recommend taking partial profit off the table, not full. The overall trend seems to be very strong, but post the recent run-up, the monthly readings are in overbought zone. So such overbought setups get cooled off either with some consolidation or time-wise correction or some price-wise retracement of the previous up move. So I think it's better to take some profits off the table and leave rest of the positions to see the next extended phase once this consolidation is over.
Okay, all right. Well, on that note, maybe we can just get a quick recommendation in from Astha also on RVNL.
Yes, in fact, the company's focus is on high-speed rail projects, but the results were not coming in that manner. So we are not very much positive from the result front of view, and hence even I'm recommending to book partial profit at the current junction.
Okay, book partial profits for RVNL. Already seen such a good run-up, right? So no harm in that. But with that, we'll wind down this edition of Your Stocks. Thank you so much, Astha as well as Ruchit, for joining in with us. And viewers, remember, you can always email us your queries and we'll address all of them with our experts. Just quickly marking the Nifty as well as the Sensex almost near the day's lowest point is what both these are trading at. But don't go anywhere. Closing bell will take the action forward through the last hour of trade.